Now we are entering into a new segment to understand DFL. The term DFL stands for degree of financial leverage. Everybody is requested to pay attention. See, DOL that we computed was measuring the effect of operational fixed cost. Anybody can write in the chat box example of the operational fixed cost. Dear students, the operational fixed costs are having examples like this. One is the rent of the office premises, then rent of the factory building. If it is an owned premises, then in that case, maybe the municipal tax. These are considered to be the operational fixed cost. So in the routine operation of the business, whatever the fixed cost that we have is considered to be the operational fixed cost. Now we are going to understand that's the effect of the financial fixed cost, degree of financial leverage. Means you are going to have the understanding of financial fixed cost. I request you to put your answer in the chat box. What are the examples of financial fixed cost? As far as the financial fixed cost is concerned, for that say we understand that say there are two fixed financial charges. One is interest and another is preference dividend. So we understand that as far as the degree of financial leverage is concerned, it represents say the two fixed financial charges. One is interest and another is preference dividend. We are going to have understanding over here that say what is the effect of the fixed financial charges, and effect of the fixed financial charges is measured by DFL. Degree of financial leverage is measuring the effect of fixed financial charges. Friends, there are two types of questions which are asked in examination. One type of the question wherein we have generally only interest, and the other kind of example in which we have both interest and preference dividend. Dear students, in financial management, listen carefully, in financial management, preference shareholders are considered more as outsiders rather than say within the part of the business. They are not considered to be the owners. As far as only equity share capital and the reserves and surplus is concerned, they are considered to be the owner's financing. Otherwise, the preferential capital is considered to be the outsider's financing. Okay, coming back to the point, everybody is requested to pay attention. Initially, we are going to have understanding of the calculation and the measurement of the degree of financial leverage when only fixed interest information is given to us, and if at all the preference dividend information is not given. In that case, how to calculate, what does it measure, all those things that we are discussing. Please write down new heading, degree of financial leverage, in bracket write down DFL. In that write down first point, DOL measures the effect of fixed operational cost. Read on further in that. DFL measures effect of fixed financial cost. Second point, DFL is calculated taking into account fixed financial charges, A. Interest, B. Preference dividend. Third point, if only interest information is given, if only interest information is given, comma, from basic information DFL is calculated using following formula. I just explained the formula also to you. I request you to write down this for the time being. EBIT upon EBT. The term EBIT stands for earning before interest and tax, and EBT stands for earning before tax. Fourth point, if only interest information is given, comma, DFL measures, write down formula, percentage change in EBT, comma, EPS for every 1% change in EBIT. The term EPS stands for earning per share. I request all of you to pay attention. I just give explanation to you. Dear students, if at all there is only interest and no preference dividend, then in that case, DFL is calculated by using a formula called EBIT upon EBT. I just give explanation of that also to you. And it measures what will be the percentage change in EBT as well as EPS for every 1% change in EBIT. It means that suppose the DFL is 5. Suppose DFL is 5 and operating income increases by 3%. So 3 into 5 is 15. With the 3% increase in the EBIT, EBT as well as EPS will increase by 15%. How 15 is calculated? 3 into 5. That is the way, so the percentage change in EBT as well as EPS is calculated. Write on a note first of all, and then I am giving all explanation to you. It means that if DFL is 5, comma, EBIT increases by 10%, comma, EBT and EPS will increase by 50%. Sir, how 50 is calculated? It is 5 into 10%. That is what we understand. Full stop. If EBIT decreases by 8%, comma, EBT and EPS will fall by 40%. How 40%, sir? It is 8% negative into 5. That is what we understand. Early end.